headlines too that we have to consider. Could a New York or Northeast hurricane bankrupt insurers? New York has experienced already a hurricane or earthquake of a 5 magnitude force, so it could happen again. Another leading article fears that an El Nino weather could strike in the 3rd quarter of this year, as forecasted by climate forecasters. Obviously, these events have business owners worried and thinking about how to handle such an event if that event were to strike, in their geographical area. To have only these events in mind, though, is unfortunate because you face other events daily that can cause your business to suffer. Your computer system can go down for 2 to 3 weeks. Fire destroys your records. Local power outages that we just were talking about before. Civil authority that refuses access to your business because of a certain event. A major customer or vendor in California is out of business for 6 months because of a fire, causing you a substantial loss of earnings. These are only a few of the various other examples, and there are dozens of more. Obviously, you should have a disaster plan, and the initial time investment of developing one will more than pay for itself in the event of a disaster, saving you clients, income, and major frustration. So, I think a new definition of disaster is required because it doesn't take a big event to cost you hours or days of downtime, extra expense, and loss of revenue. A disaster for any business can simply be a temporary or permanent loss of critical data or the inability to conduct business over a period of time. Insurance should be a major part of your plan, so it's extremely important to review your risk and exposures with your insurance agent so that you are not underinsured. So, today I'll concentrate on various insurance coverages you should consider. Time does not warrant an in-depth explanation, but I wanted to just give you ideas that you should talk to your agent about, and maybe your agent has never describe them or explain them to you in the past. So I hope this will help you in putting together your insurance plan. First thing I want to talk about is business income. This covers the loss of income plus continuing expenses such as rent, utilities, payroll, etc. And covers such perils as windstorm, hail, fire, water damage, civil authority. What it's designed to do is basically put you in the same position as if you didn't have a loss, okay? So if you don't have that coverage, it's very, very important. Basically, there are 2 types of policies that provide business interruption coverage. One is a business owner's policy, usually for small businesses, and that coverage is usually on what they call an actual loss sustained basis, which means whatever that business income loss is, we're going to pay that for up to 12 months. Now, there can be an extended period after that, but we're going to pay the actual loss sustained for 12 months, and usually there is a 72-hour waiting period that in some cases can be modified to 24 hours. The other type is a package policy, and in this case, you choose the limit you want, and then you choose the time that you want that payment to be paid. And it's a very, very complicated process because you want to make sure that you're properly insured, and there's a big comprehensive form you have to complete. So if you do have this kind of policy, it's important to review that with your agent and also your accountant so you have the correct figures. Again, there's usually a 72 waiting period for that also. Extra expense, which can be a part of your business interruption coverage. And what that covers is, we're going to give you coverage to maybe go somewhere else while your place is being renovated or fixed. You might want to go next door, have to hire additional people, bring in more computers. You're going to have additional rent. What we want to accomplish here is to get you back in business as soon as possible so you can keep your customers and continue working the best you can while your other business is being restored. Very important, because if you're out of business for 6 months or more and can't service your clients, they go somewhere else. And the average is 20% of the people that are out of business for 6 months or more lose 20% of their customers, and those customers don't go back. The next coverage, which is very, very important, is called civil authority, and that is part of your business income coverage. And that covers loss of income if you are shut down and they shut down egress or entrance into your facility. So for instance, you have a fire next door and the road is closed for 2 or 3 days while they're fighting the fire and cleaning up. So your business is closed by civil authority. Okay? You can get coverage for that, for the loss of business income while you're closed by civil authority. However, what you have to pay attention to is that we're only going to cover the perils that you are insured for under your policy. So that could be fire, windstorm, hail, water damage. We're not going to cover things like flood, earthquake, terrorism, unless coverage is on your basic policy, okay? So it has to be a covered peril under your own policy. A word of caution, however, in previous forms prior to 1976, the event that took place that closed your business, there was no location distance or any limit on where that other place took effect. So for instance, if there was a fire in the next town or a couple miles away and that caused your business to be closed for a while, you'd have coverage. After this 1976 form, the limit is 1 mile. So if there's a claim that's more than 1 mile, it's a possibility you won't be covered for civil authority. So I would advise checking with your agent what form you have and if that can be modified or not. If you have business income, is flood insurance covered? The answer is no, unless you might have a sublimit of flood coverage under your regular policy. But if you just have a flood insurance policy, not covered. You might get what they call a DIC policy or a difference of conditions policy that you can manuscript to get different coverages that might fit your needs. What if your property is not damaged, but you have a major supplier in Missouri that is providing you with a major part or something major in the manufacture of your goods, and they have a fire that causes them to cease business for a period of time. That could cost you money, downtime. What happens if you have a large client that goes out of business for a while because of a covered loss, and you lose the income from that client? A lot of people don't recognize that this could be a very big exposure, and the insurance agent should be asking you, do you have these type of exposures? Because there's coverage for that, and that's called dependent or contingent business income. So you can cover the loss of income from somebody else having a shutdown of their business. You just have to make sure that you identify the name and location of that business that you want covered. Utility services, we talked about that before with the previous panel. And there's many kinds of utility types of coverage that you can get. One's direct damage. So if a fire in your building caused the electrical to go down, you have coverage. You have business income as a result of off-premises power failure. And you have also, you can get spoilage coverage for off-power utility services failure, and that would be good for somebody like restaurants or something like that. This has a very, very low public awareness, but it has serious potential economic losses from a power failure standpoint or power surge, okay? And it's important that you understand how insurance responds to these type of situations. Only, believe it or not, 10 to 15% of commercial insurers purchase this type of coverage. Large commercial customers that PSS&G is used to, and their big customers often have contracts with utility companies that require that the voltage surge or dips will not exceed a stated rate, say 10%. However, high-tech equipment, if you have high-tech equipment in your business, can often be damaged with as little as a 5% voltage variation. Believe it or not, power disruptions worldwide cause more than 17,000 computers